Guys, how we doing? Good morning. I'm Ryan Mack. Welcome back to Trading, guys. Today we are going to be smashing through fundamentals as always. We might look, depending on timings, guys. It's Ramadan here. I'm not a Muslim, but I do live in the highest population of Muslim countries, so it is a massive holiday here. The city is completely dead now. It's a city with 45 million people. Sometimes just traveling 1 kilometer in the car can take you 2.5 hours, right? It's so busy, it's so packed, it's so polluted, it's insane. However, because everyone has fucked off back to their villages, the place is absolutely dead and empty. So it makes it so easy to go here, there, and everywhere around the city to places that we don't normally go to because we think, fuck it, I can't be bothered sitting in a car for 4 hours just to go 7 kilometers away. Do you know what I mean? So we're going to go and do stuff as a family. I thought I would smash this out as my little boy is getting his lunchtime nap. All right. My watch is telling me, fucking hell, that I'm swimming now. I'm no swimming, mate. Right, anyway, I'll take this off and I'll deal with it later. So let's crack on. As always, guys, get your notepads out. You're going to be writing currency strength, strong, weak, and then neutral, okay? As always, it's strong, weak, and neutral, not strong, neutral, and then weak, which would be logical. The reason for that is we write down which economies are strong, which economies are weak, which economies are neutral, and we pair up a strong economy with a weak economy, and that tells you if you're going to have a good uptrend or good downtrend, if you're going to be buying or going to be selling. That's your reason for taking the trade, right? Remember, whenever I'm doing my videos, I am not talking about scalp trading, guys, okay? This is predominantly my style, is swing trading. Scalp trading is a totally different bag, and I don't cover it. My business partner Lee, he covers it in the group, okay? If you guys want to join our academy, our trading academy and mentorship program, you can absolutely join it. All the details are down below here in the description on how you can join. And you can see here, look, this is from last week, that was Friday there, that was yesterday actually, 877 quid. Look, this week's trading results, here's Brian, look at that. Alright, this is all our guys in the group. That was mine, 87. I'm sure there's more. There's Lee. This is my business partner, Lee, who gives you the scalps. He is in profit, 21k. And by the way, he had already withdrawn 10 grand, which I'll show you here. I'm sure he's got it up here. Here he is again, look. Look, 7, 2.5, 2.5. There we go, Bosh, he was up. I'm positive that he actually withdrew 10k. Anyway, here you go. There it is. Here's the 10k that he got in. Right. Yeah, great stuff. Here's like another one. Okay, so this is our guys that copy all of our trades. Alright. Bosh. Here's another one. Look, you can see some small losses. Look. Win, win, small loss, small loss, small loss. Win, win, win. Alright. So if you want to join us, we've got everything here. If you come across to the education side, look, starting from the beginning. I have literally made all of this, and I've got videos here teaching you every single thing that you can think of. I've even made a fundamental cheat sheet. I've even given you an example of a trading journal. And really, these first couple of videos from 1 all the way up to, let's just say, let me see. I'd say all the way up to video 12, right? So, all the way up to video 11. They're just kind of informational videos. They're to give you background information, and they're really for people who maybe you've just woke up one day and thought, fuck it, I'm going to try this Forex, and you really don't know anything about it, okay? So I explain what is a pip, what is a lot, what is a spread fee, what is a buy, what is a sell, what is, what's bearish, what's bullish, what does that mean, hawkish, dovish, what does it all mean, and I explain all of that. And I've also answered some questions in here that people always ask me. What makes trading difficult? Can I quit my job if I put $500 on an account? Can I quit my job? And no, you fucking can't. Is Forex a scam? Is a common one. What is Forex? So I've got it all there. However, after that, video 13, 12, 13, 14, etc. When you see me wearing a white shirt and a cream waistcoat, this is the full-on education. So if you're someone who already knows about trading, maybe you've been doing it for a year or even 2, and you're just not quite profitable and you haven't understood fundamentals, what actually makes the market move, then these are the videos for you, okay? And then While I was making this course, I actually took live trades as I was making it, you know. So whenever a trade came up, I just fucking took it so you can see, you know, we're not bullshitting. Here it is here, look, there we go. I was in a gold trade here. There, if you look at the top of that corner, you can see it, 1,426 pips I was up at this point. Here you go. All right, so it's all here. And then at the end of it, I always include how do you piece it all together, how to control your emotions while you're trading, the theory of emotion control, how to journal your trades, all right? And then here I've included some videos which I think are good for the kind of psychology type stuff, all right? Things that I just found informative. We've got risk management down here. We've got Forex trading books. If you want to download all of these, you can download them all and take them for free. Trading psychology, it's just tons of stuff from online, which I find, you know, really helpful, all right? The stuff from us, but there is also stuff, you know, from the main prominent figures online. So we've got it all. This is my managed account where I trade my own account, but then other people attach their account to mine, and it trades it for them, right? It's called a PAM account, okay? So if you want details on, if you just want to do my course individually, you can do my course without mentorship, or if you'd like the course plus full-blown mentorship, guidance on a daily, weekly basis, then you can join the program, right? It's super cheap, guys, affordable for everyone, okay? So let's get moving on. As you know, if you've been following my videos for a while, you will know we do one economy at a time, apart from AUD, China, and NZD, and that's because they're all very closely correlated to one another, okay? If China is doing well, AUD will do well. If China is doing bad, AUD will do bad, okay? What's called positive correlation. If China goes up, AUD will go up. If China comes down, AUD will come down. Now, AUD and USD are what's generally known as negative correlation. So if AUD is going up, USD will potentially be coming down. Right? There are times where they will, you know, go at the same. Both will go up, both will go down. There's different market, you know, different things happening in the market. But in general, you will mostly find high percentage of the time that if AUD is going up, USD will be coming down. If AUD is coming down, USD will be coming up. That's called negative correlation when they move in polar opposites, right? Positive correlation is when they move together in sync, like Bitcoin and Ethereum. If Bitcoin comes down, Ethereum will come down. If Bitcoin goes up, Ethereum will go up, okay? And so on. So let's get cracking with this, guys. 21st, okay. So let's see last week's news. Bearish, I'm just going to fly through it. Bearish, bearish, bullish, 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 bearish, bearish, cash AUD, bullish. Well, it is bullish, but it wouldn't have given a bullish effect because it would already have been priced in. And as you can see, AUD has been super bullish recently. That's because the big boys, they don't wait for the results. They already buy it, you know, fucking ages ago. Priced in, they already price it in. Sorry, is the term I was looking for. What you'll find is when it's already forecast to come in at 410, and when it comes in at 410, you'll be expecting this massive jump. It doesn't normally happen because it's already been priced in. Now, if it was forecast to come in at 410 and it came in at 450, then you will see the market fly because that's unexpected. Okay, that's a shock. That's a surprise. Anything that's a surprise to the system, greed and fear, shock, surprise, it has a reaction, okay? But if it's already been predicted, then it doesn't really have much of an impact, okay? Long term, anyway. So that's bullish. So why? I don't know why it's not been changed there. If they've already changed it here, why is it not changed there? Anywho, so why is that bullish, right? I wasn't really going to explain a lot of stuff on here. I just wanted to fly through it, but I will explain this. So why, when the cash rate, i.e. the central bank rate of inflation, when that increases, why is that bullish for an economy? Well, if you look here at central bank rates, right, what is a central bank rate? It's really the rate of inflation. So you always hear people talking about, oh my God, inflation's through the roof. And people are like, what is inflation? Well, this is inflation, right? The central bank rates. It's an interest rate from the central banks of each economy, right? Each country, if you like. So that should really be 4.10 now. It's probably going to get updated on Monday. I don't know why it hasn't updated now, but we now know that that's 410, okay? So when that's 410 and everything else is 3.75, 2.25, 2.15, 0.75 and 0%, what does that actually tell you? That tells you that Australia is offering the highest amount of interest for anyone who invests in their economy. So, and how do you invest in the economy? You buy bonds, right? You buy Australian bonds. So if you've got a bunch of money that was previously in, let's just say the euro, and you've bought tons of euro bonds, right? Well, the euro is now giving you 2.5%. Australia are now giving you 4.10%, right? If you put your money. So why wouldn't you sell your euro bonds and buy Aussie bonds? Because you're getting essentially, let's just say, double your money back, double your interest, right? So why wouldn't you do it? Of course you're going to do it. So this is where money flows. Money flows out of the Eurozone and it flows into the AUD so they can profit from this. Now, how does that affect the Forex markets? Fuck off. It affects the Forex markets. Hold on, my fucking watch here. I'm going to have to turn this off. Apparently I've been swimming for an hour, which I haven't been. That is one of the pain in the arses with these watches. If you just nudge them, they bloody... Come on. Fuck off. Right, I'm just going to fix it later. Sorry. So what happens is if you buy bonds, that money's going to flow out of the euro and into Aussie bonds. Now, how does that affect the Forex market? If you wish to invest in an economy, i.e. a country like Australia, move it from euro and AUD, you need to purchase the bonds in the currency of the country that you wish to invest in. So if you have euro bonds, you need to sell your bonds, in which you get a big lump of euro. You need to then sell your euro and then purchase AUD. Then you use that AUD to purchase bonds in Australia. Now, because that creates a huge supply of euro, because everyone's selling their euros to get fucking rid of them, right? It creates a huge supply and low demand, which makes the euro weak. When everyone's trying to purchase AUD, it creates a huge demand and the supply shrinks as more people buy them, because remember, they're buying hundreds of millions, if not billions of them, right? Which makes the AUD strong. So that's why we care about central bank rates and why we care about looking at the bonds to see if they're being bought or sold and so on and so forth. Okay, so that's the reason behind it. I'm not really going to explain everything else, GDP and blah, 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 because I just want to hurry up and smash this out. But that's quite a good one to share, right, because it's a live example here and how we can use it to our advantage. Moving on, okay. So bullish, bearish, 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 employment change, massively bullish, bearish, bullish, sticky, sticky, bearish. Okay, so I'm going to keep AUD in strong, AUD strong, NZD I'm going to keep it in weak. I'm going to put CHF in neutral, right? I know we're not covering it yet, but we never cover CHF on this. As I always say, CHF is never traded based upon economics, based upon data. It's traded based upon market sentiment, risk on or risk off, okay? If it's a risk off sentiment, then you're looking to buy CHF. If it's risk on, you're looking to sell CHF. It's very, very simple. This week we've got flash manufacturing, flash services, CPI, trimmed. Yeah, so we've got a fair bit of news this week that we want to see for Aussie, but it's still strong, okay? Right, let's have a look. CAD. CAD is shit anyway, so I'm putting CAD in weak because it is shite. Bullish. Bullish, don't be fooled that it's red. Look, it's only red because it never came in at 0.7. It came in less than the forecast. However, if you look at previous, it was at 0.0. So it has grown, right? It's growth. So that should be green, really. Don't be fooled by the colour being red or green. Look at the numbers. Okay, so that's bullish. Bearish, 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 bullish. Bullish. That's probably because of oil, right? Because the Canadian dollar is very closely pegged to oil. So when oil's doing well, given the circumstances with Iran, the Canadian dollar will get strength. Okay, no change. Bullish, bullish, bearish, bullish, bearish. Okay, so that's kind of mixed data, but it's shit. It's only get any of those positives are only positives because of oil. They're not real positives. So yeah, Canadian dollar is weak. CHF we don't look at. Euro. Bearish, bearish, sticky, sticky. So that's bullish, bullish, bearish, bullish, sticky, bullish, bearish, bullish, bearish, bullish. Okay, so it's mixed data. I'm going to keep Euro in neutral, but it's a kind of neutral to weak bearish, I would say, right? Neutral to weak bearish. It's probably more weak bearish, but I'm going to keep it neutral for now. I only ever really move them if it's solid bearish, you know, into weak, or a solid bullish into strong. If it's weak bearish or something, I just mark it down as neutral. But I've got a good memory. I just remember in my mind, okay, this is weak bearish, you know. Sorry, wrong one. Moving forward, what we're doing next week. Yeah, so we've got tons of news next week for the euro, flash manufacturing, German services, and so on. Yeah, we've got tons of news next week that we want to see for euro, so bear that in mind. Moving on to GBP. Almost done. We've only got GBP, Japanese yen, and USD. Bullish. That is bearish. Do not be fooled that it's green. Claimant count change is how many people are claiming benefits. It has went from 4.7 thousand to 24,000. That's not good. That means 20,000 people, 20 more thousand people have started claiming benefits. That means 20 more thousand people are out of a job, right? The reason why it's green is it came in better than forecast. They thought it was going to be even worse at 25.8, but it came in better than forecast. That's why Forex Factory has made it green, okay? Do not just look at somebody and say, oh, it's green, it must be bullish. It's not the case, okay? Look at the last number. Has unemployment, essentially. Claimant counts changed. Yes, it's increased by 20,000. That's not good, okay? Average earnings index has dropped. So average earnings, so more people are claiming. People that are working are earning far less money than they were previously. That's not good. Unemployment rate has remained the same. It hasn't got worse, but it's remained the same. 5.2%. That's not good. Official bank rate is 3.75. There it is right there. So that's inflation. Okay, so bullish, bearish, 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 plot dot, sticky, bearish. Yeah, it's bearish, so it's not good. So I'm going to keep pound in neutral. Okay, I'm going to keep it in neutral, but I'm going to remember it's probably kind of weak bearish. We'll check prime market terminal after this. So let's see, hold on. Do we drink? Flash manufacturing PMI. PMI, PPI output. Oh, we've got tons of news next week for the pound, okay? So let's look out for that news coming in. Let's see, moving on to Japanese yen. Japanese yen is the economy shit, guys, but we still need to look at the data. You might get good data just now, but it's just a bit of good news. It's not a good economy, okay? 1.7 bullish, bearish. Bullish, bullish, but it's still minus. What am I talking about here? Nah, it's bearish. Sorry, because it's worse than expected. It came in better than expected, but it's worse than it previously was. So my bad. Bullish, bearish. Fucking hell, bearish. Again, don't be fooled by the green. It even throws me. You always need to think about it. Bearish, bullish. Okay, so it's shit. Next week we've got core CPI year on year, flash manufacturing, SPPI. Yeah, so we've got a bit of news we want to see next week as well. But Japanese yen is going to remain in weak because the economy is shite. NZD, we've done that. So now we're on the last one, guys. This one's quite quick, so I might do what do you call it? Technical analysis. All right. So bearish, bullish, bearish, bullish, bearish, bullish, bearish, but it came in better than expected, but it's still bearish, bullish, bullish, same sticky. And the Fed are looking to not cut rates this year. Now, there was 2 rate cuts anticipated for this year for USD. Now, it's looking like there may actually be rate hikes, okay? So, that's already off the table. But, I mean, we already spoke about this a year ago. If you look at my old videos, I already said this was going to happen. Or it's potentially going to happen. There was a high chance. Bearish, bullish, bullish, bearish, bullish, but still not good. Bearish and bearish. Alright, so fuck off. I'm still gonna keep USD in strong for now. Okay, just because of geopolitical stuff, etc. I'm gonna keep it strong. It's still fairly bullish. Nothing's really thrown it off there. This week coming, we've got tons of news. Flash manufacturing PMI, flash services PMI. Yeah. Okay, so let's see what happens there. Let's have a quick look at Prime Market Terminal. Let me just refresh this. This is a great little tool here. It shows you what people are in. Is this? It's DXM, so this is retailers, right? So whatever information this gives you, as in who's in buys, who's in sells, you want to be doing the opposite, right? So like this. CHF Japanese yen, 60% are in buys and 80% in sales. So you probably want to be buying that. You probably don't want to be selling it, right? You want to be doing the opposite of retailers because most of them have no idea what they're doing. I mean, what are we looking at here again? What was I looking at again? Oh, yeah, the currency strengths. Let me just have a look. Okay, here we go. Okay, so USD, bullish, yep. Euro, bearish, yep. I said weak bearish. GBP, weak bearish, yep. CAD, weak bullish. That's I've got it down in weak, but that's because I'm basing it on the economy, right? The economy is shit, but like I said, it will be getting bullish because of oil. That's the only reason why it's bullish, okay? The economy is not bullish. AUD, weak bullish, yep. NZD, bearish, yep, got that. Japanese yen, bearish, yep, and CHF, neutral, yep. That's pretty much all spot on. The only one that doesn't match mine is this one because I've got it as weak and bearish, which it actually is. It's only weak bullish because of oil, which if you look at last week's video, I already said this, all right? This is a good one as well. Have a look at. Let's just move this out of the way. Fuck off. Okay. USD, very bullish, very bearish, bearish, bullish, bullish. This is a fucking great tool, by the way. Also, if you want to purchase this, it is down in the link below with quite a large discount if you follow the link. It's a brilliant tool. Brilliant tool. It's so informative. You get your risk on, risk off sentiment right here, and it also tells you up here. If you come across to here, this one, and you turn it on, they've actually got guys in the office reading out live news as it comes through and updating you. So if you're someone who, let's say you watch Powell giving a speech and you're like, I don't really know what this guy's saying because it's all a bit, university type stuff, or, maybe above the kind of type of language being used that you're used to, then these guys actually have people reading out the news to you as it comes out live. And they update you in a very simple terms. Obviously, you can look at currency pairs as well. You can have a look right there. Sorry, you can have a look down here at DMX. You can see what retailers are doing in a particular pair. You can see what the banks are doing, which is normally always the opposite. and then macro AI, you can actually ask AI questions and it will tell you the answer. Like, where do you see GBP NZ heading to over the next 3 months based on current, data, blah, 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 blah. And it will give you an answer, and it will also provide the sources of that answer. It's a fucking amazing tool, guys. I absolutely love it. Currency overview. So you have got, you've got all your currency strengths right here. It tells you right away, strong, euro, blah, 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 blah. And here, you've got all of the currencies which you can choose from, okay? You can just click on any of these and it will come up like this here. Here, you've got real-time headline news. It tells you geopolitical, Asian equities, market analysis, and it just constantly updates, okay? You can see them here. It's fantastic. It is an amazing piece of kit. Right. Moving across. Sorry, hold on. Right, there we go. So, let's have a look at what we've got. So what you would do now is, right, you would come across here, and you don't need to look at every single pair. I know I do, but it's just because I'm trying to show you, You just look at strong, AUD, USD, weak, NZD, CAD, Japanese yen. So, AUD, NZD, right? Right away, I know I'm looking to buy that. So, let's have a look. Right, okay, I'm looking to buy it, I'm not looking to sell it. Let's see where we are. So I'd say it's like on the H4. Boom, right? So what I'd be looking at, I don't even need to use markers, etc., because I've been doing it for so long now. Boom, bish, bash, bosh, right? That's it. I'm looking for it. So I now know when it comes back, it retests here, I'm going to enter that for a buy. And away it goes, right? That's it. AUD Japanese yen. You would be looking to buy that. Let's just see, is there any? I like to look at higher time frames. I would say right here. I don't even know. There we go. What's that one there? Hold on. Right. There we go. Bosh. Comes back, retest this zone, and away it goes. Right. AUD USD, I wouldn't trade it because both of them are strong. So I wouldn't trade it. You're just going to get a range. Look, and what have we got? You've got a fucking range. Why do you have a range? Because both of them are strong. If both of them were weak, the same thing would happen. If it was strong versus neutral, you're just going to get a shitty little move like this, right? But when it's strong against weak, you get good moves. CHF Japanese yen, same again, right? Euro AUD, I'd be looking to sell this. I would not be looking to buy this, right? So let's see where we are. Where do we have a good opportunity to enter? We're looking for value. Value is anything around. There we go. So we've got the 618 here. My favourite little spot. And look, it ties right in to the EMA. So essentially, that's good enough value. We're looking for this. Bish, bash, bosh, right? There you go. So I don't get tricked with FOMO or anything anymore. See whatever this market does outside of this box, I do not give a flying fuck, right? It might only come to here. It might only come to here, right? And then start melting. And I've just missed it. That's fine. I'll just ignore it. But this here is what I'm looking for. Boom, boom. So if it hits this zone here, I will enter the trade. I'll put my stop loss behind here and let it go, right? I will not be trading this long because the Eurozone is weak and the AUD is strong. This is just simply bankers cashing in their profit. When they take their profits, the markets just rise up. When the markets rise up, retail traders that don't understand how to piece all of this information together will be entering buys. When they're entering buys, what are they doing? They're creating liquidity because they've got millions of fucking stop losses all down here, and they'll keep adding up as it comes up. Once all these stop losses are all piled up in a big fucking row here, the markets will hit here, maybe come down, maybe push a little further back to get them to enter more, and it will just go bang, 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 right? And they'll hit all your liquidity, take all your fucking stop losses out, and you'll be like, oh my god, I thought that was a buy. No, it's a fucking sell. You just have to wait for it to hit your areas, okay? EuroCAD, I'm going to ignore that for now. Euro CHF, Euro Japanese yen, both are weak. You see what happens? Like, Euro is weak, Japanese yen is weak. So what do? You get a range. If Euro is strong, Japanese yen is weak, you get an uptrend, right? It's that fucking simple, guys. Euro NZD, yep, this is definitely a buy. I've already marked it, as you can see. So probably what it'll do is I'll wait for this. I'll go like this, boom, 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 enter, bang. So I'm probably going to enter when it gives a wee pullback and goes, okay? But as you can see, I already had this fucking marked up last week. You see that? It's not a fluke. It's because I understand how to read this data and put it onto the charts. And you can as well. It takes 4 to 6 weeks of you actually doing the work, and you will be as fluent as this as me, I swear to God. GBP AUD, that's definitely a sell. I'd be looking for, there we go, I've already marked it up actually for a sell here, and then away we go. GBP CAD, look, already had it marked, look, boom, boom, reject, and away we go. See, already had it marked, look, all these areas, boom, 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 boom. It always comes in, fucking always comes in, guys, I'm telling you. That's just a liquidity grab, you know, came up a little bit higher, liquidity grab, bounced off the EMA, and away we go. GG is a buy, but it needs to come back down and hit here first. I wouldn't be touching that, it's pretty boring. GBP NZD is definitely a buy, already got it marked up. I just want to see it, boom, pull back and go, so I'll probably enter that next week. GBP USD I'm not touching, you can see it's just rangy. We already took this. Fuck off. We already took this. Nothing. It's weak against weak, right? So you wouldn't take it. NZD, we already took this actually down here. We're out of it now. I wouldn't touch it again. USD CAD, I'm not going to touch that just yet because USD is strong and CAD is strong because of oil, right? So that's why, again, look what you're getting. When both of them are in the same category, you just get a range because one has to be stronger than the other, right? And when they're equal, you just get this range. That's all that happens. Again, shitty. USD Japanese, it definitely buys. Look, already had this marked up. Look, small candle, large engulfing. Once it's broke, comes back, retest this area, and away it goes, right? But it's not really good value, to be honest. I just don't like it. Oil is bouncing around this rangy area. Look, we've got it here. So what I'd like to see on oil is I'd like to see it go at boom. I'd like to see it come back for a liquidity gap. All the liquidity, all the stop losses of retail traders is down here, right? This is where all the stop losses are. So I'd like to see it come back down, both give us a liquidity grab, and then just go at bang, bang, enter, away we go, right? That's what I'd like to see. And that's what I'll be entering, okay? Gold, Meltsville. So I've got these two areas marked up. It's just a retracement, that's all. I'd love to see it come back down and hit this zone here. I didn't take sales, but a lot of the guys took it in the group. Same with silver and same with copper, right? It's coming bang into our first zone. So let's see what happens there, our buy areas, okay? So that's pretty much it, guys. As I said, I'm Ryan Mack. Thank you very much for watching. This is the trading, guys. If you want full-blown mentorship, education, once you've went through our videos, I literally come on and do live trading with you, and I'll give you examples. I'll say, right, if we're going to buy this now, you tell me, where would you buy it from? Where would you put your stop loss? Where would you put your take profit? And why are you doing it? And we will just, it doesn't matter if you're wrong. Of course you're going to be wrong from time to time. We'll keep going over it and over it and over it and over it together until you get it right, okay? What is the difference between a professional and an amateur? An amateur practices until he gets it right. A professional practices until he cannot get it wrong. That is the difference, ladies and gents. Thank you for watching. Have a great week. Be safe. If you see a trade, take it. Manage your risk. If you don't see a trade, just walk away from the computer and save your money. Okay? Much love.